Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the social risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Link for that is in the description below, and of course, you can get access to the charts that you see in the video on the website. Now, when we talk about Bitcoin and we talk about risk metrics, sometimes we'll talk about price risk, which is based on the price movement of Bitcoin. Sometimes we'll talk about on-chain risk, which is based on on-chain activity. And then other times we'll talk about the social risk, which is based on people interested in the content, right? Like following people on Twitter, viewing YouTube channels that are pushing out cryptocurrency related content. And by combining all three of these things, I think it gives us a fairly interesting view of the cryptoverse. Now, in this video, we're going to talk about the social risk. We talked about it before. We've looked at this a number of times. And in fact, it's been one of the reasons that we have maintained a fairly bearish view on the altcoin market really since the beginning of 2022. And it's because of the social risk that it gives us some insight into liquidity. You can also look at, sort of the net liquidity model that we've shown on TradingView. But if you just look at interest in cryptocurrency content, it almost gives you an idea of if liquidity is entering the cryptoverse or leaving the cryptoverse, right? Now, why is that? Well, if you can imagine if I have a YouTube channel, right? You're watching it right now. If you can imagine if at some point I'm averaging, let's call it 50,000 views per day, and then at another point later on, I'm averaging 100,000 views per day, then you can see that a lot of people are coming into the cryptoverse, right? But if on the other hand, we go from averaging 100,000 views a day to then averaging 50,000 to then averaging 25,000, then it kind of shows that people are not really interested in at least that content, right? Maybe they find me boring, which is valid criticism, whatever it might be, right? I mean, investing's boring. It should be. So the point is we can track this stuff. We can see if people are actually tuning in to this sort of content and to get an idea of if liquidity is entering or leaving. I know it's because of these views about the social risk and noting its trend as well and saying, well, if liquidity is leaving, then the altcoins are bleeding, right? And I mean, it's essentially as simple as that. Altcoins thrive on excess liquidity. It's when a lot of people have just a lot of extra money and they want to put it somewhere, they want to seek out yield. They can often get impatient just putting it in the stock market or putting it in precious metals. And if they're flush with cash, they'll tend to go risk it on higher risk assets like altcoins. So if liquidity is coming into the market, altcoins can often do well. If liquidity is leaving the market, then altcoins can often do poorly. If you look at last cycle, by the way, this is the social risk, this orange line. The blue line is the price of Bitcoin. If you look at last cycle, while it did sort of put in its lows in 2018, it still kind of hugged those lows, and it did not really begin an uptrend until the halving year, right? Until the halving year started, the social risk did not really begin an uptrend. Now, what's fascinating is when this uptrend started, if you were to go look at, say, total 3, if you were to look at what happened going into the halving year, you can see that it was in the halving year. Once the halving year started, the altcoin market started to do well. And then, of course, we had the recession, right? If you have a recession, then it's going to completely take out, whatever seasonality there might be. It's like how, post-election years tend to be fairly good for the stock market. But like in 2001, it wasn't because we had a recession, right? So there is seasonality, but of course recessions can disrupt that seasonality. And so when the halving year started last cycle, that's when altcoins started to move up, right? And we sort of got out of this downtrend, right? And then we had a recession, and then we kind of had to start over. But even in that case, you can see that the altcoin market, basically got back up to these levels only a few months later, okay? So When you go back to the social risk, you can see that it was in the halving year, right? At the very end of December of the pre-halving year and then going into the halving year, the social risk started to put in higher lows, and it wasn't just sort of hugging these lows at the bottom. So as the social risk was going higher, so too was the altcoin market, right? The altcoin market was going higher with it. We, of course, had a recession, a very brief one. And what you'll notice is that it's true that the social risk came down into that recession, but it was a higher low, right? It was a higher low. It's the reverse of what we've been talking about for the last 2 years, where it's just been lower highs and lower lows, right? Now, the social risk put in a new low as recently as last month, and altcoins continue to go lower, and the Bitcoin dominance continues to go higher. So when you think about the social risk, right, as it goes down, liquidity is leaving the altcoin market, leaving the cryptoverse in general, but it's flowing into the lower risk assets. Now, Bitcoin, in my opinion, is still a risk asset. It hasn't proven itself to not be. I mean, it tends to do really well when the stock market is doing well. Not all the time, but it does usually do well when the stock market does well. But what you'll notice, again, is that as long as the social risk was going down or hugging the lows, the altcoin market was bleeding, right? It wasn't until the halving year where the social risk started to move up, and so too did the altcoin market. And now this is one of the reasons why I've been so openly bearish on the altcoin market for almost 2 years. And the reason, again, is because we can see that liquidity is leaving the cryptoverse, right? We can see it. You don't even need to look at the social risk. You can just look at net liquidity and see that liquidity has been leaving. If you're not familiar with what I'm talking about, if you go over, so we have this, total 3, which is the altcoin market. If we were to overlay net liquidity onto this chart, let's move this up to this existing pane up here, right? You can see that the yellow line is sort of more or less tracking liquidity, right? And the altcoin market are these candles, and so you can kind of see that it tracks it fairly closely, right? Like as the altcoin market, as liquidity is drained, the altcoin market tends to go down. As liquidity comes back, the altcoin market tends to go up, right? But all this is reflected as well in the social risk. Now, what makes up the social risk, right? Why should we be interested in the social risk? Well, it's made up of 5 different individual risk metrics that are all averaged to create the total social risk, right? So it's averaged out from YouTube subs risk, YouTube views, Twitter analysts, Twitter exchanges, and Twitter layer 1s, right? So that's what all 5 individual risk metrics look like. And when you combine all of them into a single one, you get something that looks like this. It's a bit cleaner. You can take, say a moving average of it to see what's going on, just sort of clean up the data even more. But that is what it's made up of. And if we were to go through some of these, this is what YouTube views looks like, right? So this is we're sort of just tracking for some cryptocurrency related YouTube channels. We're tracking new YouTube views. This is a 7-day simple moving average. Now, it's not as clear on here, but I mean, if you zoom in, you can see that it just continues to go down. If you were to look at a 30-day SMA and sort of smooth it out a little bit more, it's really just been putting in lower highs and lower lows. And, even over the last just couple of months, all of these channels combined were averaging about 700,000 views a day, and now they're averaging about 500,000 views a day. It's a pretty big drop, right? I mean, in the span of 2 months, these channels went from averaging 700,000 views a day to 500,000 views a day. So that shows you that people are less interested in crypto. This is not uncommon, right? And you might wonder, well, why is that, right? I mean, there's been so many great things that have happened in the news. Think about how many cases that have gone in the direction of the cryptoverse, especially, when related to the SEC. So why is it that all of these altcoins continue to go down? Even XRP, which was sort of the one that came out, Ripple just a couple of months ago. If you remember, we had that news. XRP shot up XRP shot up and then it completely retraced that entire move. And then now it's just simply getting rejected potentially here off the bull market support band, right? So why is it that you get good news, but the altcoin market goes down? Because I mean, XRP is just representative of a lot of the altcoins in terms of its trend. Why is it that it goes down? It's because it's not dependent on the narrative right now, or ever really. It's more dependent on excess liquidity. And until excess liquidity comes back, the expectation that I have is that the altcoin market will bleed. And so when we look at the social risk, what we would want to look for is a bottoming out process. Now, again, it literally just put in a new low last month. Okay. So, and last cycle, it didn't really start an uptrend until the halving year. So that's why when, we started this, the whole bear market a couple years ago, we were just like, guys, if you want to buy altcoins, take a cold shower and reconsider, because there's going to be some crazy pumps. There's going to be a lot of bear market rallies, but they're mostly just going to be lower highs. And again, if you go look at the altcoin market, what has it been since November of 2021? What has it been? It has been nothing more than a series of lower highs, right? You can see we had one here and another lower high, another one. Just a series of lower highs every step of the way. And why shouldn't it be? People are leaving the space. But as we get closer to the halving year, we have to be on alert. Some of the trends could potentially change. We must remember, though, that if a recession materializes at some point, let's say we do get a recession next year, then that could lead to some type of move like we saw last cycle. And it might last longer than it did last cycle, because last cycle the Fed was very quick to print. Maybe this cycle they take a few months to print, right? Maybe they take a little bit longer. And so we could spend longer at those lower levels if that were to happen. But the point is that at this phase, we still have 2.5 months of the pre-halving year. And history shows us that we really shouldn't expect activity to pick up until the halving year. So my expectation has been, and will continue to be, that the altcoin market will bleed in the pre-halving year. And that's why the Bitcoin dominance should continue to go higher. So this is YouTube views. Now, I don't like picking on any individual person because, it's just not, it's not what I want to do. So the best thing I can do is to pick on myself, right? That's the best thing I can do. If you look back, back in 2021, 2022, you can see that I was averaging, 100,000 views a day. Now I'm averaging like 40,000 views a day, right? People don't care as much anymore, right? There's nothing that can be done, right? People just simply do not care. And when you add all of them, it's that way for everyone, right? Because you could say, well, again, Ben, you're pretty boring. Maybe people just don't want to listen to you. You keep repeating yourself, and that can get kind of old kind of quickly. And so why should people watch you? You're going to say the same thing every day. That's a valid point, but again, the trend stands across all of these cryptocurrency YouTube channels for the most part. So this is an important metric to track. We have the same type of stuff for YouTube subscribers to those same YouTube channels. Look at this. Look at all the new subscribers back over here. This was a lower high, and ever since then, there hasn't been a whole lot of activity. Look at last cycle. When did we start to get a new influx of subscribers? Like, when did it start going up? You can see here, it started in the halving year. Things started to pick up with interest in the space. It was in the halving year that it started. It was not in the pre-halving year. In the pre-halving year, altcoins bled, right? It was in the halving year this thing started to activity started to pick up. So I know a lot of people out there have been very annoyed with my views on the altcoin market for the last 2 years. But the reality is I'm just trying to help people save their money and not lose it all in the altcoin market. The reason for that is the oversized gains that can often come from the altcoin market come because you're not buying every bear market rally in the altcoin market all the way down, right? That's the reason why they come. And if you sit in cash, you sit in Bitcoin. If you want exposure to Cryptoverse by sitting in Bitcoin, it gives you the exposure to the upside. So if it goes up like 2x like it did this year, you had that exposure, but you're also minimizing your downside risk by not having, as many altcoins, and also having cash in case we do see the altcoin market bleed out as we go into the end of the year, which still is and has been my expectation. Now, YouTube is only one side of the equation. We also have tracked Twitter followers to various analysts on Twitter. And when you look at that metric, you can see that it actually called the 2021 November top pretty well. I mean, that was a spike at the top. And ever since then, it has just been in a bear market, right? You know, getting new followers on Twitter has not been nearly as easy as it used to be. Okay. For instance, all of these accounts down here that you can see collectively are averaging, this is a 7-day moving average, but are collectively averaging 415 new followers per day. Whereas back over here at the peak of the bull market, these accounts were averaging 42,000 new followers per day. That is a huge difference to go from over 40,000 new followers a day to now 400 a day. That is 2 orders of magnitude less. That is why the altcoin market has and continues to bleed. It's because there's not more people coming in. You have to ask and I've said this basically every time we do this video for the last 2 years, you have to ask yourself, right? When you go out and buy an altcoin, who's the marginal buyer, right? Who's the marginal buyer if people are still leaving? You need people to come into the space, right? Leaving the space means there's likely just less buying pressure with all these altcoins, okay? And Bitcoin has held up the best because it's the lowest risk asset in crypto. It's still a risky asset and it can still drop. And again, normally it does drop a lot before the halving, but the altcoin market tends to bleed no matter what, whereas Bitcoin tends to get that secondary scare after all the liquidity from the altcoin market has been drained, okay? We can also follow Twitter followers to exchanges on Twitter, right? So various exchanges, see what's going on there. And I mean, again, to these exchanges, at one point, they were averaging about 100,000 new followers a day. Now they're averaging about 200 followers a day. It's a huge difference, right? So, and this is interesting because if you think about like who's the new money coming into exchanges, there's really not a whole lot, right? I mean, if there were a lot of new people signing up for exchanges, I imagine they would be wanting to follow these accounts on Twitter to kind of see what's going on. Not everyone would, but at least some people would. And that's just simply not happening. And then lastly, Twitter followers to various layer 1 accounts on Twitter at one point was averaging over 100,000 new followers a day. Today, averaging about 4,000 new followers a day. And a lot of them, if you sort of just hover over, right, you can see that they're losing followers on a daily basis, right? I mean, like look at the screen there, but you can see that a lot of them have been losing followers on a daily basis. Some of them have gone up, some of them have gone down, but it has not been the trend that you would want to see if you wanted to be, sort of confirm that liquidity was coming into the market. And again, last cycle, liquidity did not come into the market until the halving year. Now, I will say one thing about this is that there's not necessarily any magical thing about the halving year, right? Like just because we go into the halving year doesn't mean necessarily anything about the direction of altcoins. One thing to consider from last cycle as well, other than just simply the fact that we entered into the halving year, one thing to consider is if you look at interest rates, right? Last cycle, the altcoin market, right, it started to go up in the halving year, but also that was when interest rates were, pretty aggressively being cut, right? So we were already heading to looser monetary policy. And even though we were already headed in the direction of looser monetary policy, the altcoin market continued to bleed, right? The altcoin market was bleeding even though the Fed was cutting rates. The Fed isn't cutting rates yet, right? So you could also argue that until the Fed starts to cut rates, there could still be this difficult task of actually getting people back into the cryptoverse, just simply because they're not going to want to go buy altcoins as they're not as likely to want to go buy altcoins if we're just in tighter monetary policy and they just simply don't have the cash to invest in the altcoin market. So that's another consideration as well. Last cycle, these aggressive rate cuts just happened to occur at the latter half of the pre-halving year and the early part of the halving year. This cycle, we haven't seen any rate cuts in the pre-halving year, right? We haven't seen any, and I'm guessing we probably will see rate cuts at some point next year. I doubt it's going to happen this year unless there's like a windfall event in the stock market where it goes down 20% or something, like a 1987 type scenario. But assuming that doesn't happen, then there's probably not going to be a rate cut this year. And if there's not a rate cut this year, why should we assume the altcoin market is going to do well? So going back to the social risk, when you look at this, you can see that as it goes down, as this goes down, there's a risk in the altcoin market of the altcoin market bleeding. Look at this metric here, color coded. With Bitcoin, it doesn't really give you a great picture of what's going on because Bitcoin sort of behaves in a different manner than the altcoin market. But when you flip this over to Ethereum, which is sort of like a good index for the altcoin market, what you'll really notice is that, this really topped out. The social risk really topped out when Ethereum peaked, right? Last cycle as well. If you go to Bitcoin, you can see that it topped out at after Bitcoin had already peaked. But the Ethereum tsunami that normally comes after Bitcoin's peak, that tends to mark the top for the social risk, right? The concerning aspect here, though, is that when the social risk goes from, say, like light blue to dark blue, that typically precedes a fairly aggressive sell-off for Ethereum. Look at 2018 and then look at 2019. A pretty aggressive sell-offs for Ethereum occurred after we went from, the point 0.3 to 0.4 risk band in social risk down to the point, to the 0 to 0.1 or the 0.1 to 0.2 risk levels. So I still think there's a large risk here in assets like Ethereum, in assets like altcoins, just simply because liquidity is being drained. Last cycle, we know two things. We know that altcoins did not bottom out against Bitcoin until after we got to rate cuts. And we know that a lot of them did not bottom out until against the US dollar, or at least a lot of them did not start their uptrend until the halving year. Okay, so these ideas that I put out about altcoins bleeding in the bear market year and the pre-halving year, it's not that crazy of an idea, even though crypto Twitter might make it out to be one. It's what normally happens, right? It's just simply the status quo, assuming the status quo remains unchanged. So that is why we follow the social risk. It's nothing personal for the altcoins. It's just this is the most likely scenario until we see people start to come back into the space. And based on the historical record, I wouldn't think that the social risk would start to convincingly move higher until sometime in the halving year. And better yet, hopefully sometime in the halving year, once we're going back to looser monetary policy, right? So you get both of those things. That could be a recipe for the social risk starting to trend higher. And remember, when the social risk trends higher, so too, generally speaking, does the altcoin market. Now, there's one thing I've talked about before as well, and that is, overlaying. So we have a workbench on the website where you can, we have thousands of indicators and metrics on the website. And, we've got a lot of great examples, but you can actually also create your own, right? So what I'm going to do is we're going to take a look here at the well, let me go ahead and first add on the social risk. So let me go ahead and add on the social risk first and add that on here on the chart. And then I also want to add on, we don't need Bitcoin price. I don't care about that for this video. Then I want to add on the Bitcoin dominance, right? So I want to add on the Bitcoin dominance, and I want to look at it without stablecoins. Okay, so what do you notice? You notice that as the social risk, the orange line, as the social risk goes down and stays at low levels, the Bitcoin dominance goes up, right? The blue line. It goes up as the social risk goes down and stays at low levels. Here, as the social risk goes down, the Bitcoin dominance goes up. Now, you might say, well, Ben, you can't say the dominance went up once the social risk started to come down because that's not true, right? Like you can, if you go look at the Bitcoin dominance over here, a lot of people will love to point out that it didn't bottom until September of 2022. But how can that be, right? Every single altcoin, well, maybe not every single one, but most altcoins were a lot lower in September of 2022 than they were in January of 2022. So at least on their Bitcoin pairs. So how can that be? Well, again, the answer is because this includes stable coins. And the stablecoin market cap, this is USDT plus USDC plus DAI plus BUSD. The stablecoin market cap, these are, let's just look at 2-week candles here, was still going up even throughout the first half of 2022 and sort of maintaining those levels until May, when it started to drop. And this can be shown a little bit more clearly by looking at the Bitcoin dominance metric, excluding stablecoins. So look at the dominance of Bitcoin, excluding stablecoins. When did it bottom? It bottomed in May of 2021. May of 2021 is when the Bitcoin dominance bottomed when you exclude stablecoins. It's not it's not outrageous to exclude stablecoins. The reason we track Bitcoin dominance is to not give us insight into flows of the stablecoin market. I'm looking at Bitcoin dominance because I want to know how altcoins are performing against Bitcoin, because it is an investor, if I'm going to buy an altcoin, it sure as hell have a decent chance of outperforming Bitcoin. If it doesn't have a good chance of outperforming Bitcoin, then why would I hold it? You're taking on more risk for less reward. So congratulations, if you held an altcoin this year and it's up 5%, you might feel good about that. But it's like, so what? Bitcoin's up, 70 or 80%. So, and inflation, you got eaten alive by inflation anyways. So, it's all about opportunity cost. The dominance excluding stables bottomed in May of 2021, which is exactly when the social risk topped out in May of 2021. So as the social risk goes down and stays at suppressed levels, then the Bitcoin dominance generally trends higher. When the social risk starts to go back up, the Bitcoin dominance starts to put in lower lows. In this case, it actually did sort of sweep these highs over here in the Bitcoin parabolic rally. We know that in a bull run, Bitcoin can do that. So that is the expectation. But before that parabolic rally happened, the Bitcoin dominance was putting in lower lows. I can't tell you how many times this year on the Bitcoin dominance we've had all these pullbacks with Bitcoin dominance, right? Like if you think about the last year and a half, how many pullbacks we've had on the Bitcoin dominance, and every single time it seems like people just come out and they dunk on it and they say, oh, so much for Bitcoin dominance, right? Like, the people that were tracking it were wrong, or the people that were bullish on it were wrong. And they keep coming out at every single high or low to dunk on it. And then when it goes and puts in new highs, they get quiet again, right? Why? Because they spent all year shilling altcoins, and those altcoins just keep bleeding. This is the truth, right? This is the truth. These altcoins keep going down. Look at, even Ethereum is struggling here, but look at ADA. It's at 24.5 cents. Avalanche just put in new lows just a few weeks ago. Polkadot put in new lows a few days ago. They keep going lower, right? They keep going lower. So, these guys can come out and dunk on the Bitcoin dominance all they want to on every single high or low, but the reality is their altcoins have been bleeding for the better part of 2.5 years. Now, you can cherry pick a local low and claim that it's up. It doesn't change the fact that it's down 80 to 90% against Bitcoin, and most of them are bullish on these alts the entire way against Bitcoin. They're still down 80 to 90%. So the reason we track this stuff is because as the social risk goes down and hugs the lows, the Bitcoin dominance goes up. Once the social risk has convincingly found a bottom, and not only that, but is also trending up, then we might come to the expectation that the Bitcoin dominance could start putting in lower lows like it did over here in the halving year, the last halving year. But we have not reached that stage of the market cycle yet. And why rush it? There's people that get upset about the views about altcoins bleeding and the Bitcoin dominance going higher. One thing I've learned about being in the cryptoverse, for all this time, don't fear various phases of the market cycle. Just learn to enjoy each phase for what it is rather than fear, what comes next, right? In the bear market years, cash is king. In the pre-halving years, Bitcoin and cash are king, right? You might say, well, why is cash king in a pre-halving year, right? Why is cash king? Well, two reasons. First of all, a lot of the altcoins put in new lows, right? So if you do want to go buy altcoins, ideally you want some cash to buy them, especially as they put in new lows. And if you're going to make a bet on an altcoin for the next cycle. The other thing is, you might not necessarily want to convert a lot of your Bitcoin to altcoins because you also know that when Bitcoin goes parabolic in a future bull run, right, like you would want to be heavy Bitcoin anyways. So there's reasons to have cash in the pre-halving year. As I've said, there's also reasons to have Bitcoin. That's why I've said if you want exposure to the cryptoverse in the pre-halving year, Bitcoin is where you typically want to be. That doesn't mean you're going to be completely protected by Bitcoin. Normally what happens is people talk about the halving constantly, and then the price of Bitcoin normally halves. In the last 2 cycles, Bitcoin had about a 50% correction sometime between Q3 of the pre-halving year and the actual halving. In 2015, it occurred in August. In the last cycle, we of course had the pandemic drop. But even if you want to discount the pandemic drop, there was still a 50% correction by Bitcoin, right? By Bitcoin in the second part of the pre-halving year, right? So like if you were to go take a price range here, just looking at this high to the end of the pre-halving year, Bitcoin dropped 53% even before you got to all the pandemic stuff, right? I mean, when you got a recession, it dropped a lot more, right? It dropped 72%. The cycle before that, the secondary scare terminated after about a 50% drop. Almost, it wasn't quite 50%, but it was relatively close, and it was a double bottom for the Bitcoin price. So that I think is relevant as well. So again, exposure to Bitcoin in the pre-halving year, if you want the opportunity for the upside, by minimizing your downside risk, to minimize your downside risk, it's pretty light on altcoins. Okay. And then once you get into the halving year, then the risk profile starts to change for the altcoins, assuming we are going back to looser monetary policy, which we probably will at some point in the halving year. But there's no reason to rush this stuff. I haven't found a reason to. There's no reason to rush it. It's best to just sort of respect where we are in the cycle and to remember that in 2.5 months, when the halving year starts, there's going to be potentially some pickup in activity in the cryptoverse, and we'll be here for that. We'll also be here to try to figure out if a recession is going to occur. We still have an inverted yield curve, and in my opinion, we're either going to have a recession or it's going to be a pretty bad recession scare where everyone thinks it's going to be a recession and then maybe it's not really one, or it might be a very mild one. So I still think we have to get through that phase, and that has not happened yet. Right? That has not happened yet. And I don't know exactly when it's going to happen, but we need to get through that. And we need to just get through the rest of the pre-halving year. And just remember that in the pre-halving year, altcoins tend to bleed. And the reason why altcoins tend to bleed in the pre-halving year, as you know, is because the social risk tends to go down. The social risk is going down because liquidity is leaving the market. And if liquidity is leaving the market, who's the marginal buyer of your altcoin? You can say, well, just you wait, the altcoins will go up eventually. Well, so what? I mean, you could have doubled, tripled, quadrupled up on your altcoins or more by just simply holding Bitcoin, because a lot of these altcoins just keep going down, right? It's all about timing, right? With investing, timing is everything. If you laddered into an altcoin for the last 2 years, then think about how many people laddered into altcoin for the last 2 years. Now, when those altcoins go back up, there's going to be bag holders that want to get out at various levels. And that's one of the reasons why a lot of altcoins become relics of a prior cycle, because there's just so many bag holders on them that there's all these resistance levels. That's one of the reasons why newer altcoins can tend to do better, because they don't have all the same drama from the prior cycle. Some altcoins can and usually do go on to put in new all-time highs, but they're few and far between. And the way you sniff out those is by looking to see which ones are putting in a bottoming process on their Bitcoin pairs in the latter part of the pre-halving year and the early part of the halving year. And if you can find those, they tend to offer a better risk-adjusted return, in my opinion, than the altcoins that are not. Because the altcoins that just keep going lower on their Bitcoin pairs are more likely to become a relic of a prior cycle than to ever go to new all-time highs. It's not an opinion, really. I mean, it's just like, look at what's previously occurred. I mean, it is opinion in the sense that I can't for sure say that will happen, but in another sense, it should not be a surprising view, considering that we can go back and look at all the hundreds of altcoins from 2013, maybe not hundreds, but dozens of altcoins in 2013 that did not go to put in new highs in 2017, hundreds of altcoins in, if not thousands of altcoins in 2017 that did not put in new highs in 2021. There's going to be a lot of altcoins that put in highs in 2021, but they're never going to put in new highs in 2025, right? So please remember that. Please remember that when the social risk turns around, and I think it will, then I think it'll be time to look closely at the altcoin market to figure out which ones are sort of looking like they're bottoming out against Bitcoin. It still hasn't convincingly turned around yet. I don't expect it to turn around until sometime in the halving year and looser monetary policy. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. And again, check out Into the Cryptoverse Premium at intothecryptoverse.com. You can, of course, get access to these charts and navigate the Cryptoverse a little bit closer. And also, with Into the Cryptoverse Premium, I do put out 3 premium videos per week. We have a Telegram channel as well. A lot of stuff. Make sure you guys check it out. And I will see you guys next time. Bye.